So Veronica, talk to us about, so obviously we've seen some kind of FOMO action in play. And when you see something like that, what should we be wary of?
I think right now, the really big warning is what's going to happen with the economy. We're expecting the economy to continue weakening into early next year. And I think the market has priced in a different scenario. So there is some downside volatility potential there. I think it's going to be really hard to get this Goldilocks scenario that a lot of market participants are betting on, where the Fed is going to be able to ease, but the economy is still going to be okay. And I don't think that's the most likely scenario.
So if that's not the most likely scenario, how does an investor position themselves? How do investors get defensive in this kind of environment?
It's really smart to take that defensive positioning. Right now, we favor large cap over mid and small cap, and that's played out really well this year with the large cap space really outperforming mid and small cap equities. And from a sector perspective, we're a little defensive there as well. We like materials, we like industrials, and we like healthcare. Some of the areas that we think are going to perform well during an economic slowdown, just waiting until it's kind of time to turn into that cyclical early recovery type of positioning.
I want to ask you about the bond market, talking about safe sectors for your money. This 3-year stretch that we've had has really been a kind of a debacle for 60/40 investors. Is it finally time to start wading into the bond market again? What do you see for the new year, especially considering that we've already seen this huge run up over the last month, kind of a game of catch up in bonds?
Yeah, so for those investors who have an objective of income, the bond market is actually a good place for you right now because you've got those higher yields that we haven't experienced in decades. But then for those 60/40 types of investors, we really have been kind of encouraging exposure to some areas outside of the traditional stocks and bond market to give you a little bit of that diversification. So thinking of the commodities area, thinking of some alternatives to help protect you when bond prices rise as the yields go higher. But then looking into next year, we do think the Fed will eventually be able to cut rates. Yields will come down, and that will benefit those bond investors. So getting in now while you're able to get those attractive yields, remembering that if you're holding that bond to maturity, you've got that steady income, but then you also will get that principal back when the term expires.
So we know Wall Street's on Fed watch this week, of course, for the last meeting of the year. Veronica, what are you thinking, or how are you positioning in 2024 in particular in terms of when the Fed would start cutting?
I think when we see the evidence that the economy is actually slowing, that's when there can be a little bit more confidence that the Fed will start to cut. Right now, the economy is still doing okay, so it doesn't seem likely that the Fed will start to ease, while it appears that consumers and the labor market can handle the current level of rates. And we've heard some commentary from Fed officials to that effect. I think it'll be really key to see what Fed officials are saying, if this is going to be more of a hawkish hold at this December, or are they going to start being a little bit more dovish with their language?
Let me ask you before we go, got time for one more. We've been talking a lot about the bond market, but also want to talk about some of your portfolio recommendations for the new year. So where do you see 2024 evolving, and what kind of sectors are you looking at for the new year?
We recently released our 2024 outlook, and we talk a lot in that outlook about the tale of two halves, where in the first half of the year, you want to be positioned to be defensive. So that's where we like large cap over small cap, and we like the healthcare, materials, industrial sectors. And then eventually the economy will start to recover, and that's when we'll take more of a cyclical bent, where maybe small caps will start to outperform in that early recovery stage.